afternoon, everyone, and welcome to Stock Market Today. It's Alyssa Corum and Ed Carson here, and on today's show, we're going to be taking a look at the charts of Chegg, Adobe, and ServiceNow. But first, let's take a look at the major indexes. So we're going to start off with a look at the S&P 500. We saw gains across the board today, but finished well off highs. The NASDAQ up about 1.1%, I believe, after a much stronger gain. You can see the S&P 500 fading here as well, but it was still a decently strong day, and we did see the S&P 500 rebound off of that 21-day line in yesterday's session.
Yeah, you're right. It was better gains than yesterday, and it's just that the finish was so much worse. You know, it was just one of the nice things is that a lot of breakouts and a lot of growth stocks still outperformed, and they came off their highs, but they generally were outperforming, the market, in there during the day, and a lot of the breakouts held. So, I mean, while this wasn't great action, we're still moving higher, and the leading stocks had a pretty strong day, even with this last hour finish, when there really wasn't any explanation for it. But, that's sort of, and we've had this sort of bumpy up and down rise, but it's still been a pretty strong uptrend nonetheless.
Yeah, and let's take a look at some of today's standouts, starting off with Chegg, a huge breakout here. The stock finished the day up over 30%, and big earnings move here with strong growth on both the top and bottom lines, both accelerating from the prior quarter. Earnings up 47%, sales up 35%, just blasting out of this base here, Ed. So this was definitely a good play for the earnings gap today.
Yeah, and my whole family uses this because they're all in college, and so they use the services here for Chegg. Really strong. The RS line was already at a new high yesterday before a 30% move, so that shows you how well it was outperforming. The problem is that we had been discussing this on IBD Live ahead of earnings. It's like it had sort of a sloppy base. It's had some history of failed, a stock failing after earnings. And so we really just didn't believe in it too much, to be honest with you. But seems like a game changer. Revenue growth now is accelerated for 3 straight quarters. Just really strong action here.
Yeah, that's right. And if we can also peek on over to the intraday chart for these earnings gaps, you definitely want that first 5-minute bar to look strong. And then we also look to see if the first hour high can be taken out. And, it did come off of its intraday highs, but it was able to hold up above that first initial burst of buying, which is definitely good to see.
Yeah, and that's how you want to play an earnings gap up. I mean, after that 5-minute or that 30-minute or that hour high, see if you can get above that, because obviously it's well extended from any other measure. But earnings gap ups, even though it's scary, it's like, how can you buy something that extended? But they often are the real powerful moves. I mean, you have to know that you have to be able to cut your losses, but the upside potential is really there.
Yeah, exactly. Often the precursor to further gains. And now shifting over to ServiceNow in the enterprise software group, saw a breakout here today with a gain of about 4.4%. The relative strength line hitting a new high here for this stock as well.
Yeah, ServiceNow and all of these stocks we're talking about, they're on leaderboard. We really try to focus on the very best stocks, and this is one of the very best ones. It really surged last week on strong earnings, so it sort of set up on that, and so it paused for just a moment, but certainly not long enough for a handle. But that's okay. Moving higher here today, really strong move. Strong earnings, really steady revenue growth. I mean, 57% earnings growth in this latest quarter, really impressive in the current climate. Just a lot of really positive things about this company. Cloud-based software is really leading the market, and this seems to be one of the big leaders in that field.
Yeah, and it finished the day still within that 5% buy zone. Always key to remember, you definitely don't want to be chasing a stock. So important to know where that 5% buy zone is. And elsewhere in cloud software, let's check in on Adobe, another leaderboard name, long-term leader here. Now, when Adobe first tried to break out of this cup with handle here, the action wasn't too inspiring, but now hitting its highest level out of this short-term handle consolidation area here. So looking better after the initial breakout wasn't quite as good looking.
Wasn't quite as good looking, and that also reflects the market. We saw a lot of
Right.
stocks doing that. Adobe had a particularly nasty reversal that day, but a lot of stocks came back because that was a bad day for the market. You know, one thing that was helping Adobe and ServiceNow is that they're integrating some of their customer service operations, like some of ServiceNow's customer service stuff will now team up with Adobe, and so you'll
Mm-hmm.
get user profiles that'll help businesses respond to customer service in some way. So, when you have two long-term leaders, two leaderboard stocks, they're teaming up, great growth. These are stocks that are really, have really performed over time, and they have really strong growth right now. So, a lot of reasons why investors should be looking at this. And it doesn't have earnings for a few weeks. All of these stocks, you don't
Right.
have to worry about earnings. Two of them just
Mm-hmm.
had earnings, and one of them is going to be in another month.
Yeah, that's exactly what I was going to say too.
Oh,
You have earnings out of the way for Chegg and ServiceNow, enough time to build a cushion potentially for Adobe, and we'll definitely be continuing the conversation tomorrow morning on IBD Live, where we are going in depth with our market insights and stocks that are making big moves. So make sure you tune in at investors.com/IBD Live. And that's it for today. We'll see you right back here tomorrow.